Just before we get started, just a brief disclaimer. Any discussions or views expressed in this presentation is general in nature, general advice only. Jack, US and Iran hostilities escalating with Trump overnight.
Yeah, the tensions well and truly back on in the Middle East between the US and Iran. Trump's come out and said he's going to hit them hard, whatever he means by that. Basically, it means the markets are now a bit more risk averse. They're a bit more worried. The oil price has spiked again, not to the levels it was at the peak of the war, but it certainly did jump up a bit, and as a result, the equity markets have sort of fallen a bit just because investors are now sort of taking a bit more of a risk-off mindset. This is sort of the biggest escalation we've had for a couple of weeks.
And inflation in the US at a 3-year high at the moment?
Yeah, so that's the headline inflation figure. So the yearly inflation, it's the largest level since 2023. Mainly due to the high oil prices and the effect it's having on the energy markets. I think the energy prices increased between 20 to 30% over the last year. So obviously that's a massive move in energy costs in the US. That's driving the inflation. The core inflation number, when you take out the increases in energy and food, that actually came in a little bit softer than expected. So it did rise 0.2%, but the market was expecting it to go 0.3% increase month to month. So inflation is sticky. Markets are expecting a Fed rate rise either at the back end of this year or probably more likely in the middle of 2027. So that's a big flip on at the start of the year when we were expecting Fed rate cuts. So yeah, inflation very sticky. And it's got to continue for the next little while.
And coming out today, ECB announced the latest main refinancing operations rate. Can you just give us a bit of background about what this is and what it means?
Yeah, so the ECB is the European Central Bank. So effectively, they're going to have a large say on interest rates, which will govern the euro and the movements in that. So like the Federal Reserve in America, like the RBA in Australia, the ECB is the central bank for the European zone. They've got a couple of rates that the market looks at. This one is the main refinancing rate. So it's basically the interest rate that banks will get for a 1-week loan in essence. This will have a large effect on the price of the euro. The market's expecting a 25 basis point increase. That's already been priced in. If it comes out greater or lesser than that, that's when we'll see an effect on the euro. But if the result is released today and it comes in at the expected 4.25%, there won't be much movement. So anything around that is where you'll see a bit of a price jump or drop.
And everyone at the moment is talking about the SpaceX IPO this month. They're looking for a valuation of 1.75 trillion.
Yeah.
Can you just give a bit of context around sort of how they're coming up with those numbers and what it actually means?
To put it bluntly, no one really knows how they're coming up with the numbers. Obviously, there's never been a company like SpaceX. Elon Musk has got a KPI in his contract that if he puts 1 million people on Mars, he's got to get a bonus. Obviously, no one's had that in their contract ever. So no one really knows how to value this company. A company's never come out and said, we're doing AI, we're going to put people on the moon or Mars or space exploration. We're going to build data centers. So this is kind of a unique beast, which is why the valuation is blown out so much. It's the hottest IPO ever. It's open across the globe, so it's not just limited to the US. So it's really unique in the way it's been structured, and it's got to sort of be released tonight. People are expecting it could even hit 10-20% increase after IPOs within a day, which is sort of unheard of. So yeah, this is really unique, and it's going to be interesting to see how the market digests it, and it could be a bit of a canary in the coal mine for all the tech and AI hype at the moment.
Yeah, it'd be interesting to see what happens with that one. So the big moves overnight. So the VIX, the volatility index, having a big jump, no doubt, on the back of the conflict overseas.
Yeah, when we talk about risk sentiment with investors, the VIX is a good thing to look at, sort of colloquially known as the fear gauge. So we can see it had a massive jump, which means sort of fear has jumped up. The 20 price level is the sort of key level to note. That's sort of the baseline. Above that is sort of when fear is sort of overtaking the market, and below that is when everything's sort of calm. So we can see it's just crept above the 20 level once again. So we'll see what it does over the next day or so, and how the market digests the latest escalation.
And what is the VIX actually measuring?
It's a forward-looking volatility index. So rather than looking at what's happened in the past, it's sort of looking at what's expected to happen, and it's sort of priced off. I think it's 30-day bond yields, is it? Something like that. Yeah, and the S&P 500. So.
Thank you. And a huge drop in gold overnight.
Yeah. Obviously, this was a combination of things: escalating tensions in the Middle East, also the inflation data in the US pointing to likely Fed rate rises in the future. So that'll boost up the USD, which is obviously what gold is priced against. So yeah, a multitude of factors. Bond yields are also rising, which will put downward pressure on gold. So it's now just above that $4,000 level. So that'll be sort of a key support level, and we'll see if it holds or if it breaks through. And if it breaks through, it could drop down even further. I think long term, markets are still optimistic of the bullish case for it, but it's just how well it can weather this short to medium term sort of uncertainty.
Thank you. And crude oil, which we've discussed, I think fairly obvious here what's happening. The conflict's kicked up again, and like we've seen for the past few months, oil is responding on the back of that. Probably similar story with the Dow Jones again.
Yeah, Dow Jones just looks at the 30 big blue chip companies in the US, and you can see yesterday was a pretty miserable day for it. So yeah, that just shows the investor risk mindset shifting.
And the chart of the day, Jack, the euro dollar. Tell us a bit about this.
Yeah, so this is sort of just having a look at what the euro's done in 2026 so far. You can see it's sort of been undulating a fair bit. It's going to be interesting sort of how the sort of two big economies in the eurozone and the US navigate the current inflation, sort of hot inflation environment we're experiencing. So yeah, with the ECB decision today, that'll obviously add some more data points to this, and the market will sort of get a better reading of it. But yeah, you can see at the start of the year, the euro was on the way up. The US were looking to cut rates. The euro was performing pretty strongly. Analysts were expecting it to increase even further than that. The Iran war kicks off. That takes a lot of the steam out the sails. Investors flow to safe haven in the US. And then that was sort of shifting again, but now that the US are changing their rate stance, inflation heating up on both sides, it's going to be interesting to see where it heads. It looks like it's trending down a little bit, but time will tell.
And the article of the day around the inflation.
Yeah, obviously US inflation is a massive data point that markets will look at, so this will just give a bit of a deep dive and explain it a bit further for you.
Okay. Thank you, Joe. Thank you.
Cool.
Cheers.
Thank you.